Hello and welcome to BYJU'S IAS. Let's take up the analysis of today's The Hindu newspaper. The Union Health Ministry has presented data to show that the lockdown has slowed down the growth rate of COVID-19 infection. According to the Health Ministry, the doubling rate of the COVID-19 pandemic in India has slowed down from 3 days to 6.2 days. And this impact of the lockdown has helped India to slightly flatten the curve, and it has given the much needed time for India to prepare for the coming days. See, doubling rate is the rate at which the number of positive cases are doubling, and before the imposition of lockdown in India, the number of positive cases were doubling once in every 3 days. But after the lockdown was put into place, the number of positive cases are doubling once in 6.2 days. So the slowdown of doubling rate due to the lockdown has helped India to slightly flatten the curve, and it places India in the same league as that of Brazil and Russia. In comparison, countries which reacted faster and countries which implemented better strategies, such as South Korea, Japan, Malaysia, etc., they have a doubling rate of 8 days. So this explains the lower number of cases in these countries as compared to India, Brazil or Russia. But countries which are slower than India and countries which fail to implement effective containment strategies, they have a doubling rate of just 2 days or 3 days. This has been the case with the United States, Spain, Italy, etc. And this explains the large number of cases in these countries. So now it is very clear that without a lockdown, India would have been in the same position as that of the United States or maybe Spain or maybe Italy. So the lockdown has definitely helped India in slowing down the doubling rate, and it has helped India to slightly flatten the curve. Then another positive for India is the ratio between the recovered patients and the fatalities. This ratio stands at 80:20, and it is much higher than many other countries, indicating that a majority of the patients are recovering and the fatality rates are still very low in India. But we need to remember that the lockdown is not the solution to the pandemic. It will not help us in eradicating the pandemic. A lockdown is more like hitting the pause button, which will help in slowing down the spread of the pandemic, and it will provide us with more time to prepare for the coming days. Now that the lockdown has helped India to slightly flatten the curve, it is making use of this time to make adequate preparations for lifting the lockdown restrictions in a calibrated manner. See, a number of people have assumed that if the lockdown is lifted after the 3rd of May, life would be back to normal. But sorry to say this won't be the case. These restrictions and social distancing measures is going to continue for at least a few months in a best case scenario and for at least a few years in a worst case scenario. So until we develop a vaccine or a cure, or until we attain herd immunity, we need to gear up our healthcare system to carry out aggressive and widespread testing in order to identify the positive cases and treat these positive cases at dedicated hospitals. Along with this, we should be prepared to impose limited and repeated lockdowns whenever there are fresh outbreaks or whenever there is a fresh wave of infections. So accordingly, the group of ministers that has been set up to deal with the crisis has been making use of this time bought by the lockdown to scale up India's testing capabilities by promoting the indigenous manufacture of more than 10 lakh RT-PCR test kits. Along with this, India is looking to import more test kits from other countries as well in order to scale up its testing capabilities. Then by making use of the time provided by the lockdown, the government of India has worked with the state governments and the country's healthcare system to identify around 1,900 dedicated hospitals for treating COVID-19 cases. Then the ICMR has also been looking for any possible mutation in the coronavirus strain that has been affecting India. Because if the virus undergoes any mutation, then it is going to render the vaccines and drugs that are currently under development ineffective. Then ICMR has also been studying the claims that have been made over the usage of BCG vaccine against COVID-19. Now let's take up the next article. The Reserve Bank of India has announced a second set of monetary measures in order to help the economy overcome the impact of the lockdown. See, on the 27th of March, the RBI had announced its first set of monetary measures in order to infuse liquidity into the economy. Now within a few weeks, it has announced a second set of monetary measures in order to infuse more liquidity and reduce financial stress and promote the flow of credit. Through these monetary measures, the RBI is looking to introduce liquidity of around 1 lakh crore rupees into the economy, out of which 50,000 crore rupees is exclusively meant to support non-banking finance companies, and the other 50,000 crore rupees is meant to support refinancing agencies such as NABARD, SIDBI, National Housing Bank, etc. See, this dedicated support is being given to NBFCs because currently they are under a lot of financial stress. If you remember, on the 27th of March, the RBI had announced a moratorium on all term loans. So accordingly, NBFCs also had to extend this loan moratorium to their customers. So over the next 3 months, these assets of the NBFCs will not fetch them any revenue. But at the same time, commercial banks have not extended the moratorium to NBFCs, which might have borrowed money from the commercial banks. So NBFCs have to continue repaying their loans, and this amounts to a significant outgo of cash, and this accompanied with the loan moratorium given to their customers places the NBFCs under a lot of stress. In order to reduce the stress on NBFCs, the RBI had earlier announced to conduct long-term repo operations in order to raise around 1 lakh crore rupees in liquidity for commercial banks. And these commercial banks were mandated by the RBI to mandatorily invest this liquidity in investment grade bonds, commercial papers, and non-commercial debentures of NBFCs. Now RBI has announced an additional liquidity of 50,000 crore rupees through long-term repo operations, and again, commercial banks have to invest this liquidity in NBFCs. And banks have also been mandated to invest 50% of this additional liquidity, that is 25,000 crore rupees, in small NBFCs and microfinance institutions. Next, the RBI has announced a further reduction in reverse repo rate, and it has reduced the reverse repo by 25 basis points, and it currently stands at 3.75%. Please note, the Hindu has incorrectly mentioned the reverse repo rate as 3.5%. See, in order to understand how reduction in reverse repo will help in introducing liquidity, we need to understand the role of reverse repo rate and repo rate. See, the rate at which the RBI borrows money from the banks is known as the reverse repo rate, and the rate at which banks borrow money from the RBI is known as the repo rate. And repo rate is the key monetary policy tool that is available with the RBI to introduce liquidity or to absorb liquidity from the markets. If RBI reduces the repo rate, then it makes it more attractive for the banks to borrow more money from the RBI and lend this additional liquidity as loans to the industry. But on the other hand, if RBI increases the repo rate, then it makes it unattractive for the banks to borrow money from the RBI, and hence it helps in absorbing liquidity from the markets. So on the 27th of March, the RBI considerably reduced repo rate in order to encourage banks to borrow more from the RBI and give out this additional liquidity as loans, which will help in kickstarting the economy, which has come to a standstill due to the lockdown. But the problem is, during such times of crisis, banks are quite hesitant to give out loans, even though they have excess liquidity, because they are concerned about the repayment capacity of the borrower. So this hesitance on the part of the banks pushes them to park the money with the RBI again and earn an interest on it, which is nothing but the reverse repo rate. So banks, instead of lending this additional liquidity, they will park the funds back with the RBI and they try to earn an interest, which is the reverse repo. So this money parked with the RBI becomes idle, and this type of hesitant and concerned banking is referred to as lazy banking. So in order to discourage banks from parking additional liquidity back with the RBI reduces the reverse repo rate, and it uses reverse repo as an indirect tool to motivate the banks to give out more loans. So if repo rate is a direct tool to introduce more liquidity, then reverse repo rate is an indirect tool through which RBI tries to encourage the banks to give out more loans instead of parking those additional funds with the RBI itself. So by reducing the reverse repo rate to 3.75%, the RBI is trying to create a disincentive for the banks from parking these funds back with the RBI, and it is encouraging the banks to use this idle money to give out more loans to the industry. The next step taken by the RBI is to increase the limit of ways and means advances that is available to the state governments. This limit has been hiked by 60%. See, ways and means advances is a route through which the RBI lends money to the central government and as well as to the state governments in order to help them deal with situations of temporary cash crunch. Whenever the central government or the state governments face a temporary cash crunch or a temporary mismatch in the flow of their revenue and expenditure, then they can borrow some money from the RBI through the ways and means advances route. This borrowing is not essentially a loan that has been provided to the central government or the state governments, but instead they are expected to pay back within 3 months. The interest rate at which the RBI allows the central government and the state governments to borrow under ways and means advances is the repo rate. If the borrowing is within the limit that has been fixed by the RBI, then the interest rate charged would be the repo rate. But if the governments go over and above the limit, and if they avail the overdraft facility, then the interest rate increases by 2% over the repo rate. This provision of ways and means advances has been provided under the RBI Act, and it helps the central government and the state governments to deal with temporary cash crunch situations. Until a few weeks ago, the limit for state governments under ways and means advances had been fixed by the RBI at around 32,000 crore rupees. This limit had been increased by 30% in order to help out the state governments to deal with the impact of the lockdown. And within a few weeks, the RBI has increased this limit by 60%, and this makes around 51,000 crore rupees available to state governments under the ways and means advances route. This route would be very useful for the state governments to raise finances for the time being, because the flow of revenue currently has been significantly affected due to the imposition of the lockdown. Then the RBI has made a very important observation that these liquidity enhancement measures will not have an impact on the inflation situation for the time being. Because see, liquidity and inflation are directly proportional to each other. When you introduce more liquidity in the market, it automatically increases inflation over the next few months. But the RBI governor has said that the current liquidity enhancement measures will not have an immediate impact on inflation, because currently the inflation trend is on the decline. And this declining inflation provides the much needed space or a window to the RBI through which it can try to introduce more liquidity into the economy in order to help India overcome the impact of the lockdown. Then in a related editorial on page number 6, these measures of the RBI have been appreciated. The editorial says that the RBI has infused much needed oxygen into the economy through the second set of monetary measures which might help India combat the impact of the lockdown. The editorial praises the liquidity enhancement measures of the RBI because it shows that the RBI is going to take calibrated and periodic steps based on the feedback it receives from the ground. As we discussed, just a few weeks ago, the RBI had taken the first set of monetary measures, and now it has taken up the second set of monetary measures in order to introduce more liquidity, and this offers great reassurance for the markets. This shows that the RBI is going to be very proactive in the coming months, and it is going to take periodic and calibrated steps in order to support and revive the economy during this time of crisis. But of course, there are going to be medium-term and long-term consequences for these liquidity enhancement measures. As we discussed, when you introduce excess liquidity, it is going to increase inflation in the long run. And even the central government and the state governments are going to breach their fiscal deficit targets. But the editorial says that these challenges are for another day, because considering the unprecedented scale of the crisis that we are dealing with, such liquidity enhancement measures are very much needed from the RBI. So irrespective of the medium to long-term consequences, the RBI has to go ahead with these drastic measures in order to help revive the economy. And the editorial praises the RBI for being able to take such brave and risky decisions. The editorial praises the fact that the RBI is trying to support NBFCs through long-term repo operations. It appreciates how the RBI is trying to tackle lazy banking and how it is trying to encourage banks to lend more instead of parking those funds with the RBI by reducing the reverse repo rate. See, right now, banks have parked around 6.9 lakh crore rupees with the RBI, and this money is sitting idle. So the reduction of reverse repo rate by RBI to 3.75% is going to discourage banks from keeping this money idle, and it will encourage banks to give out loans to the industry, especially to the MSME sector. See, the concern that banks have with regard to increased lending, especially during this time of crisis, is quite genuine. Because banks are concerned that such lending would be riskier and the borrowers may not be able to repay these loans. So the editorial suggests that in order to address these concerns of the banks, the government can come out with a credit assurance scheme. Such a scheme will help in guaranteeing the loans that have been given out by the banks. The editorial also appreciates the RBI for hiking the limit of ways and means advances for the state governments. It appreciates the special refinance facility that has been provided for refinancing agencies such as NABARD, SIDBI, National Housing Bank, etc. So in conclusion, the RBI has shown that it is extremely proactive when it comes to responding to this crisis, and it has been taking all possible monetary measures. So now the responsibility is upon the government to come out with a suitable fiscal support package in order to support and revive the economy. Next, in a column on page number 6, the writer illustrates how Kerala has been displaying an incredible performance in tackling the pandemic. See, around the world, the fight against the pandemic has exposed the inequalities in our society and as well as the lack of political and institutional capacity of our governments. This argument is very true in the case of India as well. The imposition of the lockdown has exposed the social and class inequalities in the Indian society. The manner in which the central government and the state governments are struggling to deal with the pandemic has exposed the cracks in our political and institutional capacities. But amongst all the states, Kerala has managed to stand out, and it has been so effective in tackling the pandemic that the Kerala model has gained popularity not just at the national level but also at the global level. See, Kerala was not only the first state to report the COVID-19 outbreak in India, but it was also the first to report the formation of multiple clusters spread across Kasaragod, Kannur, Pathanamthitta, etc. But despite the initial exponential rise in the number of cases, Kerala has successfully managed to flatten the curve within a just few weeks. From being a state with the highest number of cases in the country, Kerala today is ranked at the 10th place. So the manner in which Kerala has managed to flatten the curve is quite impressive, and it has managed to achieve this despite having a very high population density and despite its citizens having very high international mobility with close connections to other affected countries such as China, Gulf countries, Italy, etc. Then it is also quite impressive how Kerala has managed to flatten the curve through aggressive contact tracing and testing. And upon this, Kerala has come out with a relief package of around 20,000 crore rupees. And all these factors make Kerala stand out as compared to the other states. The writer says that this success of Kerala can be attributed to its social development model, which the writer calls as social democracy. The writer says that the establishment of social democracy in the state over the last 60 to 70 years has given rise to social citizenship, which has helped Kerala to reduce inequalities in the state and raise the political and institutional capacity of its government. The writer says that social democracy has taken root in the state due to various movements that the state has seen over the last century, and also due to various initiatives that has been taken up by successive governments post-independence. The writer says that these movements and initiatives have led to the establishment of social democracy in the state, which has guaranteed the provision of basic welfare and broad-based opportunity to all its citizens. He credits the establishment of social democracy to various movements and initiatives, including the temple entry movement of 1930s, which reduced the caste divide. He also attributes it to the peasant and workers movement seen in Kerala in the 1950s and 60s, which reduced the class divide. He also refers to the mass literacy movement of the 1980s, which made Kerala the state with the highest literacy rate in the country. Then he also refers to the decentralization movement led by the Kerala Shastra Sahitya Parishad, which led to the establishment of people-centric decentralized planning in the 1990s. Then more recently, the gender and environmental movements have also contributed to the strengthening of social democracy in the state. So the instilling of social democracy combined with a highly mobilized civil society has helped Kerala to reduce inequalities over the years and strengthen its political and institutional capacity, which provides for a rights-based welfare model. Under this model, the citizens are treated as right-bearing citizens and not just as subjects or clients of the state. These are some of the factors which make Kerala the state with the highest human development index in the country, which is comparable to some of the West European countries. Upon this, Kerala has built up a lot of resilience in tackling disasters, thanks to its recent experience with multiple disasters, including the back-to-back floods of 2018 and 2019, Cyclone Okchi, and the outbreak of the Nipah virus disease. All these factors have led Kerala to develop an efficient decision-making model that is rooted in public healthcare and decentralized local governance. This is what makes the Kerala model quite successful when it comes to dealing with a crisis or a disaster with minimal impact on its weaker sections. Now let's take up another column from page number 6, which analyzes the unethical ways in which political parties are bypassing the Anti-Defection Law or the 10th schedule of the Indian Constitution. See, without getting into the political aspects of the article, let us understand how the Anti-Defection Law is being bypassed by political parties in order to topple democratically elected governments. We have seen this happen recently in Karnataka and as well as in Madhya Pradesh. See, under the 10th schedule of the Indian Constitution or the Anti-Defection Law, a legislator can be disqualified on two grounds. One, if he voluntarily gives up his party membership, or if he votes or abstains from voting against the whip that has been issued by his party. A political party which is trying to topple a democratically elected state government is indulging in horse trading in order to convince the legislators of the ruling party to resign, so that the two grounds for disqualification provided under the 10th schedule can be bypassed. Because the provisions of the 10th schedule will not apply if the legislator has voluntarily resigned. After resigning, these rebel MLAs belonging to the ruling party are offered a ticket by the other party to contest in the upcoming by-poll elections. So this allows the political party that is trying to topple the government to offer ministerial positions as an incentive to the rebel MLAs if they resign in order to bypass the 10th schedule. This is what happened in Karnataka last year, and the same has repeated in Madhya Pradesh as well. In the case of Karnataka, the speaker had disqualified the rebel MLAs for the rest of the assembly's term, and he had also barred them from contesting any by-polls. Because the constitution provides the speaker with discretionary powers to decide whether resignation of an MLA is voluntary or not. So the Supreme Court upheld the right of the speaker to disqualify the rebel MLAs, but it struck down the decision of the speaker which barred the MLAs from contesting the by-polls. So this allowed the rebel MLAs to contest the by-poll elections on the tickets offered by the other party and occupy ministerial positions in the new government. So this unethical bypassing of the Anti-Defection Law exposes the flaws in the constitutional provision and creates a need for its reform in order to uphold democratic ethics and the faith of the voter in parliamentary democracy. See, apart from this, the 10th schedule has another flaw which was challenged in the Kihoto Holahan versus Zachilu case of 1992. In this case, the constitutional validity of the 10th schedule was challenged on the ground that it restricts the right to free speech of the legislator from speaking up against his party or voting against his party. In order to overcome these flaws of the 10th schedule, the writer suggests two reforms. First, to ensure that the 10th schedule does not restrict the right to free speech of the legislator, the writer suggests the implementation of the recommendations of the Dinesh Goswami committee. This committee had recommended that the whip of the political party should be made binding only in case of vote of confidence or vote of no confidence. So then, only in cases of vote of confidence or vote of no confidence, the MLAs would be bound to follow the party whip, and in other cases and issues, the MLAs would be free to raise their voice even against their own party. So this will ensure that the Anti-Defection Law will help in preventing the unethical fall of a democratically elected government, and at the same time, it will uphold the right to free speech of the legislator. The second reform recommended by the writer is to institutionalize the decision of the Karnataka Speaker, which not only disqualified the defected members, but also barred them from contesting the by-polls. So those who defect and unethically bypass the Anti-Defection Law by resigning, if they are barred from contesting the by-polls, then it will prevent them from holding a ministerial post in the new government, and it will act as a disincentive against horse trading. Now let's take up the practice questions. Which of the following statements are correct? The Kisan Rath mobile application has been launched by the Ministry of Agriculture to ease the disruption caused by the lockdown to agricultural supply chains, especially for perishable produce. It will connect farmers and traders to a network of more than 5 lakh trucks and 20,000 tractors to take the produce from the farms to warehouses and markets. The application has been developed by the Department of Science and Technology. Amongst the given statements, the third statement is incorrect because the Kisan Rath mobile application has been developed by the NIC or the National Informatics Center. So the correct answer is option B, 1 and 2 only. This question has been asked because we have an article on page number 10 which refers to the Kisan Rath mobile application. Now let's take up the next practice question. The United Nations Economic Commission for Africa was established by the United Nations Economic and Social Council. Option D is the right answer. See, the United Nations Economic and Social Council is one of the primary organs of the UN. It established the United Nations Economic Commission for Africa based on the directions of the UN General Assembly, and this commission promotes economic cooperation amongst the African countries. A similar Economic and Social Commission of the UN exists for the Asia Pacific region as well, and India is a member of it. This question has been asked because according to this article on page number 14, estimates of the UN Economic Commission for Africa has shown that around 3 lakh people could be killed in Africa by the COVID-19 pandemic. And the World Health Organization has predicted that up to 10 million cases of COVID-19 could come up in Africa over the next 3 to 6 months. Now let's take up the next practice question. Which of the following statements are correct? Special drawing rights are supplementary foreign exchange reserve assets defined and maintained by the World Bank. It is a type of currency issued by the World Bank which can be exchanged by a country for making loan repayments. Both the statements are incorrect. Option D is the right answer. See, special drawing rights or SDR is a type of supplementary foreign exchange reserve assets that is defined and maintained by the International Monetary Fund. It is not a currency on its own, but it represents a claim to a currency of another country. The value of the SDR is tied to a basket of currencies such as the US dollar, the euro, the Japanese yen, the Chinese yuan, and the pound sterling. SDR can be used by member countries of IMF to exchange for foreign exchange reserves whenever they face a shortfall in their traditional forex reserves such as gold, US dollar, etc. This question has been asked because according to this article on page number 15, the IMF has come out with a liquidity initiative based on special drawing rights, which provides for a general SDR allocation for all the 189 member countries of IMF to deal with the financial difficulties that is being caused by the COVID-19 pandemic. But this initiative has been opposed by the United States and as well as by India because according to India's finance minister, such a major liquidity injection could produce potentially costly side effects in the long run. Now let's take up a practice question from the 2019 prelims paper. The economic cost of food grains to the Food Corporation of India is minimum support price and bonus, if any, paid to the farmers plus procurement incidentals and distribution cost. Option C is the right answer. See, the total cost incurred by the Food Corporation of India in procuring crops is the MSP and the bonus paid to the farmers plus the logistical cost involved in procurement and distribution such as transportation cost, warehousing, losses, etc. Finally, let's take up a couple of mains practice questions. The first question, examine the impact of lockdown in slowing down the spread of COVID-19 pandemic. The second question, to overcome the economic impact of COVID-19 pandemic, what measures have been taken by the RBI to increase liquidity in the market? So kindly write an answer to these questions and post them in the comment section below. This concludes our discussion for the day. Thanks for watching.